Nice to meet you all. My name is Jamie McAvity. I'm the CEO of Cormint. Cormint is a Bitcoin miner that is headquartered in Fort Stockton, Texas, which is about 5 hours west of here. Beautiful God's country, West Texas out there. And today I'm going to be chatting about how Bitcoin and Bitcoin mining are very, very good for the state of Texas, how Texas is a great place to be a Bitcoin miner, how this symbiotic relationship between the industry and the state is really not an accident, and also how we have some opportunities ahead of us to harness this relationship and have a number of degrees of mutual benefit. So, kicking it off, as usual, Texas is number one. Texas currently has the largest Bitcoin. So Texas has the largest Bitcoin mining footprint in all of North America. This is a little bit of an old graph here. It says 2,300 megawatts. I'm sure we're north of that now, probably close to 2,500 megawatts, which is 2.5 gigawatts of mining installed capacity here. If you compare that to the peak load of ERCOT, it's not the dire situation that a lot of the media would lead you to believe. The peak load in ERCOT's about 85,000 megawatts. So relative to total electricity consumption, Bitcoin mining is a relatively small footprint here. However, we are number one in North America, and we're also number one in efficiency. So 3 of the top 10 miners, I had to find this chart where Cormint was number one there, so it's from Q1 2023, but 3 of the top 10 Bitcoin miners of all of the reporting companies, they are headquartered in Texas, primarily based in Texas. So yeah, we are number one in size, we're number one in efficiency. This is not an accident. I'm gonna get into a little bit of why that is the case a little bit later, but it all starts with the power grid. You know, you have on-grid miners here in Texas who are connected to the power grid, which is called ERCOT. You also have a really large off-grid mining footprint like the Gigaboys take care of, where you hook directly into a natural gas power source, you generate your own power, you mine with it. The on-grid miners are pulling from the power grid. Most of them are located out in West Texas, which is actually the fastest growing renewable energy jurisdiction in the entire country. But ERCOT is a deregulated marketplace, and there are a number of different types of electricity grids. You have deregulated, you have semi-regulated, and then you have sort of fully regulated, what are called capacity markets. In a deregulated marketplace, effectively, the grid allows the market to price the volatility of power. So they don't say, look, we're gonna go pay you, power generator, build this power plant, you're gonna get a guaranteed rate of return, and that's that. Here, you build a power plant based on free market signals that are sent to you by the wholesale electricity market, and nobody's there to bail you out. So it's very much like Bitcoin. It is a free wholesale electricity marketplace here. By contrast, a regulated electricity grid is one where basically the grid buys all of the power market volatility. So they don't let prices float. They don't let prices go up to $5,000 a megawatt like we do in Texas, yeehaw. And as a result of that, there is much lower power market volatility, but consumers pay on average much higher prices. So, you know, Texas is a free market haven here, and obviously that's the way we let our power grid work. And Bitcoin mining is, the way that I like to describe it is, it's an economically perfect consumer of electricity, meaning that there is a very precise exchange rate for a kilowatt or megawatt hour of electricity into a certain quantity of Satoshis. And that, since the price of electricity changes every 5 minutes in a power grid, that exchange rate can be either $1 per megawatt hour too high or $1 per megawatt hour too low, and that is a signal for you to shut off your Bitcoin mine or turn back on your Bitcoin mine. So Bitcoin mining is effectively the process of converting a megawatt hour of electricity into a fraction of a Bitcoin. And so when you have a deregulated free market type of price signal that's being sent to market participants, it's a bit of a match made in heaven. So mention you guys that we have a deregulated marketplace. As you can see, what that means is lower costs for everybody. It also means that it's a great place to be a power generator. The interconnection process here is much easier than in other states. There's significantly less red tape. And so what has happened effectively over the last 15 years or so is the federal government has been subsidizing the development of renewable energy through what are called production tax credits, where effectively they give you a tax credit to build and generate renewable energy. The free market here in Texas has responded to that by building a whole shitload of renewable energy, most of which is out in West Texas, which has excellent wind conditions and solar conditions. So another area, Texas, the #1 fastest growing and largest installed wind and solar jurisdiction in the country. And look, cheap renewable energy is great. It's great as long as the sun is shining and the wind is blowing, but when neither of those things are happening, what we've been seeing over the last 5 years, there's been tremendous load growth in Texas, and those hours where there is no sun and there is no wind, we're seeing tremendous power market volatility. So much so that we're setting records. 3 of the months from last year were record power price months in the entire history of the grid, as far as the top 10 is concerned. So renewable energy is good. However, it's not necessarily reliable, and a functioning power grid is one that can reliably deliver power to all of the users on the grid whenever they demand it. And so this transitioning grid is creating a little bit of a pricing problem where the cost of those hours when there are no renewables generating is skyrocketing. And so the Bitcoin miners are rightly recognized by ERCOT as an extremely valuable solution to this problem. This is a chart that was put together by a guy who works for ERCOT named Evan Neal. He's in charge of a task force that has basically been set up to help create regulation that makes it a great place to continue to be a Bitcoin miner and harnesses the ability of these Bitcoin miners to support grid reliability. So in this chart, what you're basically seeing is, this is from September 6th last year, when one of the hottest days towards the end of the summer, power prices shot up through the roof, and this blue portion here is all of the Bitcoin mining load shutting offline in response to high prices. And you may have read a whole bunch of stuff out in the papers about how it's unfair that Bitcoin miners are being paid to shut off their electricity. It's ridiculous because anybody can get paid to shut off their electricity as long as they own that electricity and they're a wholesale market participant. But the important thing is so Cormint, my company, we don't get paid to shut off our electricity. We are just responding to an economic price signal that's being delivered to us by the ERCOT wholesale electricity marketplace. So, like I said, Bitcoin mining is an economically perfect consumer of electricity, which means at $1 below and $1 above our absolute break even, we have an economic incentive to shut off and turn back on. And so nobody needs to pay us to be economically rational. And I don't know the exact number, but something like 80% plus of Bitcoin miners are not being paid to behave like this. So what that means and what that looks like is you have an organic form of demand response. You have these Bitcoin miners who are coming in and soaking up all of this excess renewable energy that's being consumed out in the middle, or produced out in the middle of the desert where nobody needs it. We have about 10% of the year electricity prices are negative out there, no joke. So they're showing a bid to the market and consuming all of this stranded electricity. And then during the hottest days of the year, you also have peak demand sometimes in the winter during bad winter storms like Winter Storm Uri a few years ago. The Bitcoin miners are shutting off. And they can be paid to do that or not. They're following their natural economic incentive. So ERCOT rightfully recognizes, hey, this is great. It's a natural market balancing force in our power grid that's leading the way in transitioning to renewable energy sources, and we get this free demand response solution that comes out of nowhere. And so that's one of the coolest things that is happening in Texas is effectively the state is getting free demand response from Bitcoin miners and also a nice bid for all this renewable energy that's getting installed. How did we end up with this? It is not an accident. Who remembers what happened in 1999? Of course, Britney Spears hit with Baby One More Time, but also of note, an extremely sexy market event was going on down here in Texas with the deregulation of the power grid. Prior to that period, a lot of transition had happened as rural electricity generation and transmission got integrated into the bulk electricity system, and then finally the deregulation of the power grid happened in 1999. And the deregulation of this power grid paved the way for the ability for the grid to grow, be extremely dynamic, accommodate all these renewables. Within a few years of that, you saw the first kind of upshoot of that, which was wind generation. So all of this wind production started getting installed out in West Texas, and wind is kind of a crazy form of power. It's inductive, so it takes a little of energy to get it going. There's all kind of voltage-related issues with it, but Texas let all this energy get installed, and they came up with a great regulatory framework to keep it extremely competitive. And this is part of a proud tradition of let shit happen first, regulate afterwards that we do here in Texas. Obviously, one of the biggest examples is the discovery of Spindletop in 1901 led to comprehensive oil and gas drilling regulation, a really, really easy business-friendly framework. And the oil and gas industry has made Texas the 6th largest economy in the entire world, by really allowing that industry to flourish and creating good business-friendly regulation there. The same thing, though, happened with space. So space exploration. In the 1960s, Texas paved the way with the creation of the Johnson Space Center down in Houston. 50,000 jobs, $5 billion in industry came as a result of that. Now we have SpaceX down in Boca Chica. So the future of space flight is now being pioneered here in Texas because of an awesome regulatory framework that was established 60 years ago. And as I mentioned before, renewables as well. Most people think of Texas as an oil and gas haven. However, we also have the #1 renewable oil sector in the entire country. Same thing, excellent regulation, very easy interconnection process, not a lot of red tape, very quick speed to market. So that's why we have the #1 wind industry for, I think, more than 10 years now. And in solar, we're gonna be #1 this year as well. So a lot of really good stuff happening here in Texas, of course. And Bitcoin mining is an industry that is being built on the shoulders of this regulatory tradition. It's a great place. You have so many Bitcoin firms who are moving here. We're the capital of Bitcoin mining in North America. And I just want to say, our relationship with our regulators here is incredible. They let stuff happen. They come out, they visited our site, they ask questions, they want to learn what's making us competitive, they want to keep us competitive, but then they also want to make sure that everybody wins, that the grid is reliable, that our behavior can be transmitted to them in a way that allows them to administer the bulk electricity system. And coming from a place like New York, it's a totally different experience where there's actual engagement, they want to keep you competitive. It's really, it's an awesome thing to see. But competitors are coming. This is what ChatGPT threw me out when it said competitors are coming. You got a bunch of guys with Bitcoin suits out in the middle of the desert looking for Bitcoins in the windmills. This is what it's like out there at Cormint. We got the binoculars, and I got one. But yeah, this is now a global state-level enterprise. So you've got Oman, you've got Paraguay. Bitcoin mining is happening on national state-owned resources. It's becoming a massive global industry. And I think we should all be very proud that Texas is #1 in this industry that is now a global thing. And our electricity marketplace is delivering power pricing that makes the firms here the cheapest in the entire world. You want to be worried about the cost you're paying for electricity. Just look at the Bitcoin miners. They'll tell you, this is the lowest cost you're going to get anywhere. So bravo to Texas, and a big thank you to the regulators here for making it such a great place to do business. And the reason why this is important, I know I'm preaching to the choir here, but what we're going after here is the largest market in the entire world. So this chart is out of date. It's 3 months old, so obviously the price has doubled. Congrats to everybody. But the sum of global GDP is $100 trillion. That means the value of all goods and services sold in the world is $100 trillion in USD equivalent. And money is on the other side of every single one of those transactions. So money is effectively the other half of all global GDP. So this is a $100 trillion market that is up for grabs. Texas is #1. It's leading the way. It's got great regulation, and the lead is effectively ours to lose. And so my message to all of you and any regulators who might be listening, I got three things I want to say to the miners. Just remember, it's Texas versus the world. yes, we are competing against each other, but really we're in this jurisdiction, we're competing against state actors, global industry, all over the world. So, come together and recognize that even though we are competing, we're all kind of on the same team as Texans. To the Texan Bitcoiners in the audience, Parker embodies this better than anybody. I mean, he's such a wonderful speaker and evangelist and a zealot, and he's, you get around him and his energy is completely contagious. It's awesome. Every Bitcoiner should be more like Parker, myself included. It is your duty to educate the skeptics and get out there and spread that message. Bitcoin has zero marketing budget, but it has probably over 100 chief marketing officer level executives who are out there writing, podcasting, speaking, doing everything they can to spread the message, and they do it all for free. Everybody should rise up. You're smarter than the rest of the world who are no coiners. Tell them why they're wrong. Get out there. And then to the yeah. So to the regulators and politicians, thank you for being so chill with us here in Texas. We promise to return the favor, and if any of us get out of line, we'll be sure to wrangle them in. And within the state, as we go through the renewable energy transition, power volatility is here to stay and growing. The more Bitcoin mining load that you get in this grid, the more you're going to have a natural volatility suppressing response. You're going to be sending a bid to the generators that are needed to support load growth, and then you're going to be having this price responsive, organic, free demand response that's there to reduce that volatility and help keep a little bit of load off during the peak. So this is a good thing. If you've read hit pieces in the Houston Chronicle or the Tribune, those are BS. Dig in deeper, look at the way that this is actually happening in the grid. The price responsiveness is documented. These are real numbers. And you can see, this is a really good thing for the state. So that's it. That's the end of my talk. Thank you.
Let's give him a hand. All right, questions. We'll start here, and we'll go to you.
You mentioned the 2 gigawatts, 2.5 gigawatts that are flexible and probably growing. Do you have any thoughts on going forward for CP management and then also on frequency regulation with all that coming off?
Yeah, sure. Those are great questions. So for CP management, it's a simple, economic calculation. The way that Texas determines transmission charges for wholesale electricity consumers is they look at what your contribution to load demand is during the peak times of the summer. So the 4 coincident peaks of the summer, that determines your transmission charges. Most Bitcoin miners are going to attempt to be offline during those periods because transmission charges are expensive, and you factor that into the sort of economically perfect consumer of electricity calculation. If you can be offline for a few hours during the summer, you can avoid $4 or $5 of transmission charges for the rest of the year. So 4CP I'm not really worried about, but look, if miners are on during 4CP, they pay transmission charges. That's no big deal because transmission charges go towards expanding and strengthening the transmission system. So that's more of an us problem than a grid problem. Frequency regulation is definitely something that's on the radar of us, our regulators, the Large Flexible Load Task Force, which is in charge of regulating miners here. We would love for there to be a simple framework that we could opt into where our curtailment points were transmitted to ERCOT and we could be ramped down or ramped up in line with how they want to administer the system. Look, it's still a government agency, so it's the process is a little slow, but what I will say is we have meetings all the time. There's a huge consortium with transmission operators in there, Bitcoin miners, ERCOT people, and then just general energy consultants who are working on designing the system that allows miners to signal their curtailment points and curtailment velocity to ERCOT, and then ERCOT can kind of control them up and down so that we don't have frequency problems. Just for the audience's edification, frequency is effectively an electricity measurement that the grid operators target to keep the grid operating harmoniously. And when a lot of demand comes offline at once or a lot of generation comes online at once, frequency can get out of whack. So the grid wants the ability to make small controlling decisions to sort of bring it back into line. So It's a good question because miners do come offline very quickly, and in a best case scenario, the grid would know exactly when that is going to happen and be able to control the velocity of that. But we're working on it.
So you talked about being a flexible energy consumer, which obviously can cut into your profits. So I was wondering if you're hedging your hash price, energy contracts, or Bitcoin, and if not, what about the current product offerings is unattractive?
Yeah, well, good question. So there's really two ways that you can operate as a Bitcoin miner who's a part of the wholesale electricity market. You can be unhedged and just ride the index price, which means wherever electricity settles for a particular 15-minute interval, that's the price that you pay for it. You could also pre-buy all of your energy for any duration that you want. You can buy 1 day ahead, a few weeks ahead, a month, many years, and what happens is if you're just riding index and taking the real-time price, when you curtail your Bitcoin mine, you're actually avoiding consuming electricity at a price that is higher than the Bitcoin mining break-even of your mining fleet, expressed in dollars per megawatt hour. So when I said economically perfect, I really meant that. I meant like at $1 above our break-even, we're offline, and we shut off as quickly as we can. The flip side of that is if you have an energy hedge, when you shut off your mine, then your energy hedge gets settled against wherever the real-time market price of power clears for that 15-minute interval. So you can actually earn money back liquidating your power hedge at a higher price when you do that. Now, the trade-off there is that in the real-time market, you tend to realize lower prices than in the forward market, but that is the calculus of the commodity trading, energy trading division of any Bitcoin mining company, is trying to figure out if there's value in the volatility of a forward power hedge versus just taking real-time index prices and getting settled at on a 15-minute basis with no hedge at all. We are unhedged, so everybody knows.
Hi. Your Bitcoin miner wish list would be like, what are the top 3 features in buying new miners you'd like to see?
Yeah, it would be great if there was a good working relationship between the ASIC manufacturers and the Bitcoin miners. Matt from Giga touched on this a little bit. It seems to be like a disdain for their customer base almost. But the things that would be the best would be the ability to tune your power draw up and down without third-party firmware. Currently, stock firmware that you buy from an ASIC manufacturer does not give you the ability to tune your power draw up and down. You have to use a third-party firmware to do that. At least not all of them do. Some of them do. Some new entrants to the marketplace do, but the dominant ones really don't, especially on the older generation models. The second thing I would ask for would be voltage ride-through. This would be on ERCOT's wish list, and what ERCOT wants is kind of what I want. So voltage ride-through it's effectively a resilience rating of a power supply unit on a Bitcoin mining chip, where if there's a disturbance on the grid, voltage ride-through means the ability of a particular device to resist that. That voltage disturbance event is pretty crucial. Basically, let's say a power plant trips off 50 miles away from a large data center, and that causes voltage to change suddenly on the grid. That can trip off another nearby load, which could trip off another generator, and you can have this kind of cascading problem if there's not strong voltage ride-through on some of those devices. Natural gas thermal plants and nuclear plants have really, really strong voltage ride-through. Wind and solar have pretty crappy, and Bitcoin mining, since we buy our equipment from Chinese vendors, the power supplies they're not super high quality. So we would love it if the Bitcoin mining machine manufacturers would build stronger voltage ride-through capabilities on the devices. And the third one would be definitely something like to your question, where we could opt into a system where our curtailment was more controlled. It could happen at a predictable velocity, and we would like to settle at a 5-minute interval basis instead of a 15-minute interval basis. I mean, this is super nerdy stuff, so sorry for getting so deep, but 5-minute settlements, batteries settle at 5 minutes, and power generators settle at 5 minutes. Loads settle at 15 minutes. The the way that pricing works, it means sometimes we end up consuming power that's way above our break even if the price spikes in the second or third 5-minute interval of a 15-minute interval. So yeah, that would be my nerd wish list for the power grid.
Simon.
Hello. It was very interesting. Thank you for that presentation. I'm just curious, have you heard about the new tax, federal government that wants to tax like 30% of the energy consumption? You know, I just would like to have your general thoughts on that and how you think Texas as a state, the mining industry here will react. And I'd like to know if you think people will comply or not comply to that.
Yeah, so this has been in 2 or 3 Biden budgets in a row, this 30% excise tax. We actually just sued the federal government earlier this year and won the EIA, which was awesome. The Bitcoin mining industry did. Yeah, so a little backstory. They requested specific load data about all the Bitcoin miners, how big they are, what utility they connect into, what's their exact location. Completely unconstitutional. We sued them, we won, we got a restraining order against them. That tax also got booted out of Biden's last idiotic budget. It's gonna get booted out of this one. Basically, the legal grounds that would make that unconstitutional, if somehow they did get it through, which they're not going to, is that the federal government doesn't have the ability to regulate commerce that's happening within a state, and they would need to somehow prove that Bitcoin mining is interstate commerce. And right now, it's just computation that's happening locally, contributing to the security of a global network. So it's not interstate commerce. You know, this is Texas electricity. This is the purview of the Texas government and the Texas grid. So look, they're not gonna stop messing with us, and we're gonna keep suing them. It's kind of fun, a little bit scary, but as far as that one, there's no way that's gonna happen. No, it's definitely base load. I mean, before the 2,500 megawatts of Bitcoin mining load was on in Texas, there was a weaker base load demand signal being sent to the generation community. Really, what the issue that you have here is the production tax credits. That you have a cohort of electricity generators who now can profitably underwrite projects assuming that they're just gonna make a $27 tax credit. So wind generates, earlier this week we were getting negative $26 megawatt hour power for about 4 hours. And that's because when a wind project gets built, its underwriting is actually mostly around collecting the tax credits instead of profitably generating energy. And so when you have all of this zero and negative electricity pricing that is hitting the market, which is really a distorted price signal that's coming from tax credits, you're driving out the incentive for a reliable form of generation like a nuke or a natural gas plant, because those, you can't shut down a nuke easily. I don't think you can do it at all. A gas plant, every time you shut it down, tremendous wear and tear on it. And so those plants have to absorb all of that zero and negative electricity pricing while they remain online, waiting for the times and the peak demand. I mean, the peak demand is so consistently every day at the same time in ERCOT right now, between 4 and 8 p.m. When the solar comes offline, there's like 15 or 16,000 megawatts of solar. When it comes offline, prices spike as all of these batteries, all of these peaker plants and generation types come online, trying to replace all of this generation that's going away. That's a really good period of time to be a natural gas plant. But in order to get that window of time, you got to be online during all of these zero and negatively priced intervals. So the renewables are really driving out the incentive for reliable base generation that's always there. And Bitcoin miners are fixing it. You know, we are the exact inverse of that. We're consuming 90% of the time, call it, maybe 90 to 95%, depending on what kind of equipment you're running, and then shutting off during the peak. So, yes, we're our shutting off is taking away some of that demand during those peak load periods. But still, I mean, the shoulder ramps when the solar comes offline. That's when you see crazy high pricing, especially in the summertime.
All right, we're going to have time for one more question before we go. I just wanted to highlight, Jamie made a really sneaky, important comment about how Bitcoin mining is not interstate commerce. So I don't know if it might be something that's right for COPA or other people that are engaged with regulators, but this idea that there's no other party on the other side of a Bitcoin mining transaction, or establishing that that all economic activity is happening within one state would be an interesting angle to help protect not just mining here in Texas, but other states. All right, one more question. Who got? Oh, Dave. All right.
So it's the nature of Bitcoin mining right now to be the energy scavenger and seek out the cheapest sources of electricity. Do you foresee in the future any combination of circumstances which would make at least the big, let's say the major on-grid players right now, to move primarily behind the meter into their own power generation, where they are building out their own capacity, and then sort of flipping the script where they become decentralized power providers into the grid?
Yeah, absolutely. I mean, so some of the things that we've talked about, the solar ramp, the natural gas plant or the nuke plant that's having to endure zero and negative electricity prices for long periods of time. Bitcoin fixes this, where you could go and buy a bunch of S9s right now. S9s came out in 2016. It's an 8-year-old piece of mining equipment. S9s make $30 a megawatt hour. So if you had a data center with a bunch of S9s behind the meter at your nuke plant or your gas plant, you could just send all of your power to those S9s when the on-grid power price went to zero or negative, and you'd be making way more money. And so more and more energy producers, I believe, are starting to see this. It is mainly the distressed ones who are coming first. Wind farms who no longer have their production tax credits are the most distressed energy generators in Texas, because they're directly competing against a fully subsidized category of generation that's in the exact same place as them. So when your wind farm is next to a wind farm that still has production tax credits and the price of power goes to -30, you're not getting any tax credits, and you got to go shut everything off quickly in order to avoid those prices. So those are the first co-locations that you've seen, are wind and Bitcoin mining. I think gas should be next. There's a little bit of gas co-location happening here, and the main deterrent to this happening, I think, is that wholesale electricity markets are extremely sensitive to creditworthiness, and Bitcoin miners are the least creditworthy market participants in the eyes of every industry ever. It's not because we're not reliable. Bitcoin mining is the single largest consumer of electricity in the entire world, extremely reliably so, and more flexible than any other industry. Like, we're bigger, stronger, and better than all of them in the aggregate, but in the eyes of their bank, they will not extend credit to a firm that's got a material exposure to a Bitcoin revenue stream on their balance sheet and in their income statement. And we had all these banks that banked Bitcoin and crypto businesses basically get dragged into bankruptcy a little more than a year ago. So it's, this is still the kind of thing where if you're a big TradFi multi-billion-dollar institution, energy company type of thing, that means you have deep banking relationships and your sensitivity to credit is extremely high. So adding Bitcoin into your operation and degrading your credit rating because of that perceived weakness in your income statement, it's probably a deterrent in those boardrooms. But my theory on this is going to be bottom up. It's going to be Bitcoin miners who take over distressed power generation assets, because we have nothing to lose. I'm already wearing Bitcoin credit risk 50,000 different ways, and I don't care. I haven't been unbankable as my company for 8 years now. Like, I love it. We borrow in Bitcoin. That's our flagship financing product, is Bitcoin denominated note. So we borrow from Bitcoiners for our financing. They're all about it.